We've seen value outperform growth. You've seen money go into cash, money go into bonds. Where is it attractive?
So, Alex, defensive plays are still attractive. Healthcare, energy, consumer staples, dividend-paying stocks. Good news is that bonds are looking much better. Finally, the investors can actually find some value on the risk management on the safer side of their portfolio. But we absolutely are positioning the portfolios for the next cycle in a very different way that we did in the previous cycle. Tech might not be the absolutely leading sectors, for the going forward, as it was in the previous bull market. Rules are somewhat changing, we're pivoting, and we're watching the data. But this is definitely the stock pickers market. Indexes might, be affected significantly more than individual stocks, because even with earnings revisions, some stocks are affected, some actually are doing better. So being in the stock pickers market is always an advantage for investors.
Katerina, Europe, the rest of the world, is currently outperforming the United States on the equity front. Is the U.S. market equity dominance era over?
Guy, we have been looking at international markets, for a while. And, let's just say that there are definitely opportunities in emerging markets and in Asia. Europe is still so, affected by the geopolitical events that are happening there. So we have to be very selective. We have to be very quality driven. But, U.S. has, been a leader of the equity markets. And in our view, will continue to be so, but while we were somewhat underweight Europe for quite some time, we're finding value and we're finding buying opportunities there as well.
Katerina, do you feel like the risk this year is to the up or the downside, in that if that the Fed over tightens, or that the economy is actually what we're seeing and we can actually engineer a soft landing? In terms of positioning and expectation, where is that tail risk?
Alex, the market always has this delayed reaction to the Fed action. So the question is, are we going to get a recession? And really, what kind of recession is this going to be? And in some parts of the market, we're already seeing this. So we have to plan for the higher volatility. We have to plan for the higher risk. And this risk hasn't really been priced in every sector of the market yet. So we're not out of the woods as much as we want to be optimistic. We looked at that, year-end rally that we just had, and it was just good to kind of think that maybe things are finally going to start being better in a more meaningful way. And we think that there will be normalization, there will be an improvement, but before we get there, there are going to be some hurdles that we have to get over. And we're going to see, the Fed action coming up in February meeting, we'll see if they're going to be, close to being done, raising the rates, which most likely there will be, and what follows. But the question is there going to be a recession, and whether it's going to be significantly mild, which is what we're hoping for.